Welcome to Uncovering Trusts, a podcast by the Edison Group, a content-led IR business integrating analyst content, digital targeting, and investor engagement. Each episode will uncover the distinct features and latest developments of a selected listed investment company. So tune in to find interesting investment ideas and to stay on top of what is happening in the investment company sector. I'm your host, Will Manuel, and today I'm joined by Joanne Collins, an analyst at the Edison Group, who will talk about Gresham House Energy Storage Fund, known by its ticker GRID. Joanne, thanks for joining us.
Will, hello, thank you.
Okay, so let's start by providing an introduction to GRID for those listeners less familiar with the fund.
Of course. GRID invests in utility-scale battery energy storage systems in the UK. These batteries are known by the acronym BESS. GRID is the UK's largest owner and operator of BESS, with an operational portfolio of 20% of the market. This is significantly greater than the next largest owner, which holds less than 10% of operational projects. The investment case for these batteries rests on the integral part they play in the global transition to renewable energies, as BESS store energy generated from intermittent sources such as solar and wind until it is required. Demand for these energy storage systems will continue to grow in parallel with increasing solar and wind power generation and the trend towards electrification. GRID generates some of its revenues by supplying this stored energy to the National Energy System Operator, known as NESO, under contract. This year it also struck a tolling arrangement to supply electricity directly to Octopus Energy under a long-term contract. And other revenue is derived from trading energy at times of peak demand.
Oh, great, that's very interesting. So who's likely to find this trust most appealing?
GRID is most likely to attract the attention of those seeking exposure to real assets, which are otherwise inaccessible, especially to retail investors. Such exposure also provides access to the very significant growth prospects of the renewable energy sector as the UK strives to meet its net zero target. GRID also offers investors diversification benefits away from conventional UK and global equities. And those focused on sustainable investments will appreciate the key contribution GRID is making to the transition to renewable energy.
Right. So I see the battery energy storage sector has been under quite a bit of pressure over the past 18 months. Can you let us know what's been going on?
Yes, the whole BESS sector has had a tough time since the middle of 2023. Revenue conditions deteriorated due to a combination of a sharp fall in gas prices and the slower than expected utilisation of battery services by NESO on its new energy trading platform. This placed significant downward pressure on the share prices of GRID and its competitors.
Right, I see. And how has GRID responded to these developments?
During the first months of this year, the company took several steps to conserve cash, stabilise revenues and increase capacity. These measures included the suspension of dividend payments and reduction in debt to reduce associated fees. GRID's manager also concentrated on commissioning the company's 2024 project pipeline and increasing the capacity of several of its already operational projects, so-called augmentations. These measures have proved effective. Revenues began rising in Q2 24 and have improved steadily since, helped by an improvement in trading conditions. 2024 earnings are expected to exceed their 2023 level of £26 million, and earnings are forecast to recover strongly next year to at least 45 million and possibly as high as 55 million. Assuming current trading conditions and based on GRID's current operating portfolio. This is due in part to the fact that GRID has reached a key milestone of 1 gigawatt of operational capacity, up from 740 megawatts in early 2024. And the tolling agreement with Octopus Energy will also contribute to higher revenues.
Can you tell us more about this agreement with Octopus Energy and why it's significant?
Sure. The agreement fixes revenues on more than half of GRID's portfolio out to Q3 2026. This provides a greater degree of income certainty, which should be a significant comfort to investors as it reduces the risk of unexpected revenue declines of the kind that unsettled the BESS sector in late 2023 and early 2024. The agreement with Octopus Energy is a landmark deal. It's the largest deal of its kind in the UK market, and both Grid and Octopus are so pleased with the arrangement that they're exploring the possibility of expanding it.
Right, and I see Grid has also announced big plans for the next 3 years. So what's in store for the company over this period?
Yes, that's right. In November, the company announced a 3-year plan intended to triple earnings from an estimated minimum of 45 million in 2025 to 150 million in 2027, based on current trading conditions. The plan also features further significant increases in capacity via more augmentations to existing projects and a new UK pipeline, which will add a further 680 megawatts of new projects over 2026 and 2027. As I said, Grid is also considering further developing its relationship with Octopus Energy and possibly other tolling arrangements as well. And it's looking at additional ways of accessing the market, although details are so far limited.
Right. And how does Grid plan to fund its future growth plans?
Funding is expected to come from a new kind of arrangement, with debt sized off long-term contracted revenues, such as those generated by the Octopus tolling deal. Such revenue-based debt financing arrangements are a well-established model used widely in project financing. Grid is currently in negotiations to refinance all of its existing debt via this kind of facility, which has the additional benefit of lowering borrowing costs thanks to floating rate terms set in a declining rate market. Negotiations are expected to be concluded in the first quarter of 2025. However, the manager intends to keep a portion of the company's asset base uncommitted to debt servicing to preserve the flexibility to capture revenue upside via trading opportunities that emerge during periods of high energy price volatility.
So I'm guessing that the recent positive developments mean there may be scope for Grid to resume dividend payments?
Yes, that's absolutely correct. When the company announced its 3-year plan, it also indicated that subject to the successful conclusion of the refinancing negotiations, it plans to reinstate dividend payments from Q3 25 in respect of the second quarter of that year. These dividends will be fully covered after costs. The company hasn't yet discussed the size of the reinstated dividend, but if earnings reach their projected levels next year, cash flow per share net of costs will be in a range of 4.5 to 6.2 pence per share. This suggests the possibility of a reinstated dividend of a similar size, which would be somewhat lower than the full-year dividend of 7 pence per share paid in respect of fiscal year 22 and the 2 prior years.
So Grid's big plans to add to its capacity by pipeline developments and further augmentations. What else should we be looking out for?
Well, Grid is also negotiating an equity investment in its Glastonbury site. This deal is expected to close in Q1 25 and would potentially provide funding to lift this project's duration from less than 1 hour to 4 hours, making it Grid's first 4-hour project. Glastonbury currently has 38 megawatt hours of operating capacity, but improvements in BESS technology mean the same site can now accommodate 220 megawatt hours, an augmentation that will offer double-digit returns, according to Grid's manager. This investment also has the potential to confirm Grid's valuation methodology, which would give investors more confidence that the company's current NAV is a realistic estimation of its true value. Grid's manager says similar co-investment opportunities exist across its whole portfolio. Another potential avenue of expansion is the overseas market. Before the recent challenges, Grid's manager was exploring investment opportunities in the US and elsewhere. And at the recent Capital Markets Day, he indicated that he would revisit these plans once next year's proposed refinancing is in place.
So moving on, I noticed historically Grid share price has traded at a premium to NAV, but it's currently at a wide discount. Do you expect this to change in the foreseeable future?
Yes, I see scope for some narrowing in the discount for several reasons. The fundamentals of the BESS sector remain very supportive, and there's clear evidence that things are certainly improving for Grid. The company appears to be on a financially stable, sustainable growth path, with capacity and revenues set to keep rising. Yet the share price seems to be pricing in a lot of bad news. So I think it's reasonable to expect some improvement in Grid share price as its expansion plans are rolled out, especially if the equity deal currently under negotiation gives investors greater confidence in the company's NAV.
Interesting. Thanks, Joanne. I think that gives listeners a very good picture of what Grid is doing and what it has to offer. You've been listening to Uncovering Trusts, a podcast by Edison Group. If you would like to find out more about Grid and the other investment trusts that we cover, please visit www.edisongroup.com.